And sometime in 2024, we will hit all-time high market cap of altcoins, and this chart will go truly into the banana zone, which I know is a very fun time. People lose their fucking minds in this period.
In the ever-evolving landscape of financial markets, understanding the nuances of liquidity and its impact on asset classes like stocks, commodities, and cryptocurrencies is paramount. Raoul Pal, a seasoned macro investor and founder of Real Vision, delves deep into the dynamics of liquidity cycles, providing invaluable insights for investors seeking to navigate the turbulent waters of global finance. In this comprehensive summary, we'll dissect Raoul Pal's recent video, where he elucidates on the trajectory of liquidity, forecasts for cryptocurrencies like Bitcoin and Ethereum, and the overarching macroeconomic forces driving market movements. Join us as we unravel the complexities of liquidity forecasting and its implications for investors worldwide. Raoul Pal commences his discourse by elucidating on the concept of liquidity cycles, emphasizing the pivotal role they play in shaping market dynamics. Using the Everything Code, a sophisticated forecasting tool, he extrapolates future liquidity trends, offering a glimpse into the global financial landscape. Pal highlights the significance of understanding liquidity not as a binary metric, but as a continuum, wherein positive liquidity fosters conducive market conditions for asset appreciation.
So let's forecast out liquidity a bit further using the Everything Code. So we saw that chart before. This is ISM going forwards. Last time I showed you the ISM versus liquidity, but here's ISM going forwards, which says the business cycle is going to rise. This is why currently cyclical stocks, commodities are rising, because the ISM is starting to pick up. But we can also forecast it out, and it gives us a peak in global liquidity in September 2024. So this year we'll see a peak. Don't worry, a peak is not a peak of markets. This is a year-over-year rate of change. We don't end up getting to negative liquidity until December 2025. So this is why I think this cycle runs between now, and it started in 2022, sometime in 2025, somewhere probably towards the latter end. Normally, the crypto markets end in December. Maybe it comes a bit sooner. We'll have to be on alert for that. But basically, this is how we see liquidity playing out. Again, don't expect perfection. I'm not expecting to be perfect, but it'll give you a pretty decent idea. You don't need a massive liquidity cycle either. You don't need 2020 to drive these things up. You just need liquidity to be positive and stay positive for markets to work their magic. Now, those forecasts, if I use the log channel of global liquidity, using the Everything Code forecast doesn't look unreasonable. Doesn't look unreasonable at all. Now, it might not get to 2 standard deviations. Maybe it's 1 standard deviation like it got to in 2017. Remember the crypto market then? That was la la land. 2013, 1 standard deviation. A complete wild crypto market. So again, you don't need the massive liquidity, you just need liquidity. And so that's where we think it might go. Let's see how it plays out. That corresponds with the log channel in Bitcoin, obviously. And that would give us something like a forecast of around 270,000 by the end of this year. Again, please don't hang on to my forecast. Say, Raoul Pal forecast 270,000 this year. That's not what I'm trying to do here. What I'm trying to do is contextualize stuff for you and say, listen, between now and the end of the year, it's going up a decent amount. Is it 150,000? Is it 250,000? Is something in the middle? I don't know, and I don't really care. And nor should you. People get too hung up on forecasts when this asset is just going up over time. Anyway, it means this year will be a very strong year. And we can plug in some forecasts. And I don't like giving these out to people because people, again, will take this out of perspective. They'll say, Raoul Pal forecast $400,000 Bitcoin, headline. That's bullshit. What I'm saying is, using our model, we see significant continued upside into 2025, where then liquidity starts falling, and so sometime around the second half of the year, we will see a topping pattern in Bitcoin and therefore crypto. And it suggests that it should be strong. Even if you halve my targets, not targets, halve the analysis that comes out of the model, that's still a great year. That's my point. Please do not tell me that I'm forecasting $400,000 Bitcoin. I'm not going to take that because people deal with it irresponsibly, and that's not the right thing. I'm just saying it's going up a lot. Also, Fed liquidity is the driver of the ETH Bitcoin cross, which is a proxy for altcoin season. Now, it's very interesting because we're now coming into the halving. And it was roughly at this point, back in 2020, that ETH started bottoming versus Bitcoin, and then took a while to base and then went up like a rocket ship for the entire next year. I managed to capture that entire trend. And it's very normal for crypto spring for Bitcoin to outperform. And then as we come into crypto summer that we're transitioning into now, ETH starts to outperform Bitcoin. This is a terribly unpopular thing to say because people say, well, ETH is dead. It's a dead chain. It's not working, blah, 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 blah. Just wait. Have patience. You'll see. Will it outperform Solana? I very much doubt it. Solana's earlier in the adoption curve, so it means the percentage changes are larger. So that's how I see it with that. You can see the start of crypto spring, which was the breakout of this pattern and the slight acceleration. That's as we're getting to warmer days of spring, as it were.
Pal forecasts a peak in global liquidity around September 2024, followed by a gradual decline towards negative territory by December 2025. However, he clarifies that a peak in liquidity does not necessarily equate to a market peak, advocating for a nuanced interpretation of liquidity data. His projections suggest a bullish trajectory for cyclical assets like commodities and certain stocks, driven by the uptick in liquidity. Turning his attention to cryptocurrencies, Pal extrapolates the implications of liquidity cycles on Bitcoin and Ethereum. He forecasts a potential price target of $270,000 for Bitcoin by the end of the year, cautioning against fixating on precise forecasts, but rather embracing the overarching trend of upward momentum. Pal stresses that while liquidity serves as a catalyst for crypto market rallies, investors should exercise prudence and avoid excessive leverage.
But really, summer happens when you break the previous all-time high in market cap and things go utterly bananas. So this is ex-Ethereum. So this is the rest of the space really starting to accelerate. And sometime in 2024, we will hit all-time high market cap of altcoins, and this chart will go truly into the banana zone, which I know is a very fun time. People lose their fucking minds in this period, and I'm urging you to remember my rules about don't use leverage, keep top 3, top 5 market cap tokens. If you are going to go out the risk curve, do it with 10% of your capital or less. Just be careful out there. Don't fuck this up. This is a gift, but you can screw it up by getting greedy, getting FOMO, and doing stupid shit you shouldn't do. Just don't do that. If you want to have some fun, catch an altcoin season, do it with your 10%. Who knows? You might make a 10x on it. Chances are you'll end up with a bunch of embarrassing stuff in your wallet that goes to zero over time. That's the way it works. But your ETH, Solana, Bitcoin, they'll do just fine. Okay, let's talk about crypto summer. Just in a very simplistic terms. Here's the chart of the seasons. So spring is green. We had a great spring this year. Summer is when a lot of the gains start to happen. Fall was tricky last time around. We got a stunted cycle. If you remember, that kind of double toppy style thing was highly unusual. 2017, 2013 were more typical, obviously, of the fall season. And so we don't know how this one's going to play out. I think it plays out more like 2013, 2017, but it's all assessing the odds as we go. But right now, this is the easy year, the summer. So we should just be able to set it, forget it, and let the gains accumulate. And then very soon, like in the next month and a half, we will start to hit the banana zone. And this is what happens when you hit the banana zone. Things get absolutely wild, which is the really magical part of why this is the greatest macro trade of all time, is this part. And it's coming. Will it look the same as others? Who knows? Some have been absolutely crazy, others were more difficult, like the last cycle. But that's usually what happens when we hit altcoin season. From summer and then into fall, things get really, really exciting. Now, at Exponential Age Asset Management, I won't talk much about that, is we actually build a whole portfolio allocation of where we want to be on the risk curve using lots of factors that Julian Bissell has put together, from the everything code, valuation percentiles, volatility, where we are in alt season, different measurements of all of this, these 9 different things, and then give it a total score. Right now, we're at 9.2 out of 10. So almost at max risk taking, but we're not there yet because we haven't got, we're not fully into summer, but that day will come and we allocate to managers accordingly. This kind of risk scoring is just a summary of what I've been talking about. Is right now, this is the time to take risk. Don't use leverage. Be careful what you own. Have fun out there and do it right. So hopefully what I've done here is try and teach you why this matters, why you should, in this festival of learning, listen to other people and learn some skills, how not to fuck this up, which is crucially important because you're being given a gift, why it's such a big gift, how ridiculous the returns have been over time and are likely to be going forwards. Obviously, there's no guarantee, but I don't see anything changing. How the everything code plays into this, how the refinancing of debts every 4 years creates a 4-year cycle that happens to correspond with the Bitcoin halving cycle and the US presidential election cycle.
Pal delves into the interplay between liquidity and altcoin seasons, highlighting Bitcoin's dominance during crypto summers, followed by Ethereum's resurgence as the market matures. He dispels notions of Ethereum's demise, foreseeing its outperformance relative to other altcoins in the coming months. Pal's insights underscore the cyclical nature of crypto markets and the importance of patience amidst market fluctuations. In the realm of portfolio management, Pal introduces the concept of risk scoring, wherein investors gauge their risk appetite based on factors like valuation, volatility, and market sentiment. He advocates for a measured approach to risk-taking, urging investors to allocate capital judiciously and refrain from speculative behavior. Pal's pragmatic advice resonates with investors navigating the complexities of today's financial landscape. Please like and subscribe my channel.